Hello, everyone. Welcome to Life Insurance with Jessica. I'm going to start tonight off by reading, and from now on, I'm going to start my nights off by reading a little positive Grim Reaper. Okay. Shake it up good. See what comes out tonight. Okay. He says, just because it feels true doesn't mean it is. These are my little cute Grim Reapers to tell you guys a little new joke every night. This one says, I'll read you two. It's the first time. My sky's polished, but you're safe for now. Hope y'all are having a good night tonight. I'm about to start a little general education on life insurance. Now, my friend to help me here says it's not death insurance. Okay. So, welcome back. If this is your first time here, welcome to the Life Insurance with Jessica channel. I am so glad that you found this channel because tonight we are getting into something that could literally change the financial future of your entire family. Tonight we're talking about generational wealth strategies, what they actually are, why most families never build them, and exactly how you can start, even if you're starting from zero. I want you to know right now, it doesn't matter if you're never invested a dollar in your life, if you got in debt, if you feel like money is just never on your side, none of that disqualifies you from what I'm about to share. Okay? So, I'm Jessica, an IUL specialist, a generational wealth educator, and I'm on a mission to make sure that the information that's used to make sure the information that's used tonight to only live in country clubs and boardrooms gets into your household because you deserve it too, not just the wealthy, okay? So let's get into it. Drop it in the comments now if you're ready to build generational wealth. Drop an okay in the comments. I'll read every single one, but it probably won't be till tomorrow because I just got off of work tonight and I'm doing this right now. So definitely going to bed after. Okay, so why generational wealth matters, the real definition. So let me give you the real definition of generational wealth. And it's not just about leaving money when you die, like everybody thinks. Generational wealth is the accumulation of assets, knowledge, and opportunities that get passed down from one generation to the next. Assets, knowledge, opportunities, all three matter. Because here's the truth. Some families have been receiving those three things for generations. And other families like mine, maybe like yours, have been starting from scratch every single generation. No inheritance, no head start, no blueprint. The wealth gap is real, guys. Okay? Wealth gap is real. According to the Federal Reserve, the top 10% of American households hold about 67% of all the wealth in this country. The bottom 50%, less than 3%. That is not an accident. That is a system. That was not built with us in mind. But here's what I also know. The system can be worked if you know how to work it. Works if you know how to work it. It starts with a decision. Every wealthy family tree has a first person, right? One person who decided enough is enough. I'm going to be that one who changes the story for everybody in my family and who comes after me. That person can be you. For me, my family, that person is me. Because you're here right now watching my channel because you wanted to find out what's out there, right? Just like I watch somebody else's channel to find out what's out there. So I need to get a little real with you because before we talk about what to do, we need to talk about three things that are keeping most families stuck. I call these the generational wealth killers. Mistake number one, trading time for money and never building assets. See, I'm like you as well. Right now, I do have my 9 to 5. I am trading time for money. but I am also an entrepreneur and working on my business on the side. Okay. Helping families with generational wealth. Because I'm sick of trading time for money. I don't know about y'all, but even if it didn't work out for either job, I know that number one, God's got my back. And number two, I have assets working for me. Most of us were taught get a good job, work hard, get a paycheck, blah, blah, blah. And there's nothing wrong with working. Like I said, I have a 9 to 5 myself. But if your only income strategy is exchanging your time for money, you will always have a ceiling, right? And probably be living paycheck to paycheck like I used to be. But now I know that my strategy is working. I get to see it every day. I get to see my assets grow every day. And I want to help other families do the same so we could grow together. Right, guys? That's what it's all about. Like finding something out, spreading the word to somebody else so we can grow together as a team, as a family, as a unit, not be separate anymore. Because time is finite, right? You only have so many hours. So when you stop working, whether that's retirement, illness, or death, that income stops, right? So if you're tired at 66, that income stops. So I hope you planned ahead of time, right? Everybody says go to job, get in with a good company, get a 401k, retire at 65. What are you retiring at 65 on? Your Social Security, if it's there in 20 years, right? If it's your 401k lasts that long or does well because it's a variable account. So it could go either way. So if the income stops, what are you going to do? Go back to work at 70? Definitely. There was something out in Forbes magazine today about workers going back to work because their 401ks are running out 5 to 7 years. But your 401k person guaranteed never called you to tell you about it or tell you how it works or anything. I know because I talk to other families every day and I ask them these questions because no one ever called me about my 401k. No one ever called me to tell me about life advice. Exactly why I'm on here at 9:30 at night after I just worked my 9 to 5 to tell you about what I wish somebody would have told me about. Okay. So wealthy families, they build assets, things that work for them, whether they're awake or asleep. Real estate, right? That's the number one thing that I'll hear everybody talk about. I know I sure do hear Grant Cardone talk about it every day in my email. So wealthy families build assets, real estate, businesses, investment accounts, and yes, life insurance. Because most wealthy people cannot get a Roth or a 401k because they make too much money. So this is their loophole, which now me and you can use, right? Because it's legal. It's got all the tax codes. All the wealthy use it, and they can't discriminate. Lucky us. So mistake number 2, no plan for when life happens. Life is unpredictable, and I know nobody wants to talk about this, but what happens to your family if you get sick, right? What happens if you can't work? What happens if you pass away unexpectedly? Like, I see car accidents happen every day on my way home on the interstate. Like, I see people die all the time, probably at least once a week. And statistically, half of them had no plan because they thought it wouldn't happen to them or they just shove it under the rug. That's why I started this channel with a big old Grim Reaper behind me, because we're not shoving it under the rug over here. We're talking about it. We're bringing it to the table. You need to plan if you get sick. You need to plan if something happens to you. You know, GoFundMe's are all over Facebook because they did not plan. This is your sign. If you haven't planned yet, this is your sign. Just saying. Life is just so unpredictable. So sorry, those are my animals. Most families have no plan. And when life happens, they're forced to use whatever little savings they had. And they usually go into debt. Drop the word debt in the chat if you've ever went into debt, right? They lose their house and everything you worked for, and your little 9 to 5 evaporates, sometimes in months. Generational wealth requires protection, okay? You cannot build a legacy on an unprotected foundation. That's just the truth. That's just the truth. Mistake number 3, never talking about money at home. Oh, I'm still mad at my parents, right? Because they never want to talk about money. They just want to say, I don't have any money, so that way you don't ask them for it. And they never want to talk about it. They just want to go to work. They want to lead by example, but not say anything. That just doesn't work. You have got to talk about money. You've got to teach your kids about credit early. You got to tell them. The schools aren't telling them what we need to know. They're not telling them about where to put your money or about how to build assets, about anything like that. They're just teaching you how to be a factory worker. So wake up. Talk about money with your kids, okay? This one right here obviously hits deep for me. In a lot of our households, money was a taboo topic, especially in mine. Adults didn't talk about it in front of kids. They don't need to know about our bills. Yes, we do. We're going to have our own one day. We need to learn how to budget. We need to know about your bills. Just letting you know. Adults didn't talk about it. We weren't taught budgeting, investing, or compound interest in school. Like Albert Einstein invented compound interest. It works for the people. Why aren't you teaching it to the next generation, to any generation, right? Why aren't you teaching it? Oh, I just don't understand. It makes me so angry because we did what? We grew up guessing, making it up as we go. Oh, I'll apply for a credit card. If it turns out, I'll spend the money. Oh, they said you're supposed to pay it back one day, right? It's just making it up as we go. And then we pass the same silence to our children. And it just keeps going on because guess what? Nobody wants to talk about money. So please help me break this generational curse. Generational wealth is about financial literacy, right? Your kids need to see the conversations. They need to know what a bill is and how to budget it. They need to know what an IUL is. They need to know what compound interest means because the family that talks about money builds money. Let me repeat that. The family that talks about money builds money. My kids are sick of me talking about money. I'll tell you that. They sure like to ask for it, but they're sick of me talking about it because I'm trying to teach them how to build assets while they're 17 and 20. So they don't have to start at 30 like I did. That's why I'm here trying to tell you in the next generation, to start early. Okay? So your kids don't grow up guessing. Break the generational cycle for yourself, right? So, all right, here's the part that changes everything for most people, because when most people hear life insurance, they think of 2 things: death and expense, right? Like it's just a bill you pay in case something bad happens. I'm here tonight to completely flip that script. Can you type in the group chat or in the chat, flip that script? Okay. What most people don't know about the IUL, there's a type of life insurance called Index Universal Life. This is what the wealthy use. This is the Roth on steroids. Roth on steroids is a good way to put it, right? Because everybody knows what a Roth is. And it is just one of the most powerful tax advantage wealth building tools available to everyday people like me and you, not just to the wealthy because they can't discriminate. Everyday people, you could start with however much money you could start with, right? Here's how it works at a high level. So you pay a premium, your monthly contribution, right? So mine, for instance, is $200 a month. That's what I'm starting out with. So I agree to pay $200 a month for my future, right? Because why wouldn't I? Worst case thing that can happen is something happens to me and my kids get it, or something happens to me and I got to use some of the money to get better. Like worst case scenario, right? You pay a premium, your monthly contribution that you come up with, that you tell your financial professional, hey, I can afford $50 a month now. Maybe in 3 years when I get a promotion, I'll do 100, and I'll set it up like that. That's all you got to do. Or whoever you're dealing with will set it up like that. Part of that goes to your death benefit, protecting your family. The rest goes into a cash value account that grows linked to a market index. like an S&P 500, a Fidelity Index, the NASDAQ, right? When the market goes up, you participate in those gains. When the market goes down, you don't lose a thing. There's a floor, typically at 0%, right? Y'all, do you understand what that means? You get market side up with zero downside risk, right? The tax advantages are unreal. This is why the wealthy use it, because only poor people pay taxes. I don't know if you knew that, but it's true. So here's what makes it even more powerful. Your cash value grows tax deferred and you don't pay taxes as it grows. Let me repeat that. Your cash value grows tax deferred and you don't pay taxes as it grows, right? So if you're wondering, why would I get an agent and get an IUL? Why don't I just invest in the stock market myself? Because, my friends, when you invest in the stock market yourself with your own account, you have to pay taxes on what that market makes for you. But if you have an IUL hiding in a death insurance policy, then you don't. You don't pay taxes as it grows because you already paid taxes the first time. They can't tax you twice on the death benefit, right? The wealthy wrote it. They're going to write it where it's the best for them. So, lucky us. Next thing, you can access your money tax-free, like I said, through policy loans. So, let's say you have $100,000 in life insurance, right? And let's say her name's Cheryl. Cheryl, you have $100,000 in life insurance, and you have $20,000 that build cash value in there, right? It's been 5 years. You got about $20,000 in there. You want to take that $20,000 out, Cheryl. So you take that $20,000 out, and guess what? It looks like it never left, right? Because it's a loan. It never left that account. So that $20,000, while you're paying that $25 or $5 or whatever it is that you agree upon, because it's like a 2.5% interest, when you pay that little amount, the money's constantly growing for you, like it never left. So like the loan literally pays itself off with the money that you make. This is what the wealthy do. Not only do they do that, they also, after they get the loan, they take that policy to a bank and they get another cash value loan on it. And then they buy more assets so it keeps growing and they can just do it again and just have this beautiful cycle, right? That you can do too, that I'm trying to teach and show you guys how to do. So the next is the death benefit passes to your beneficiaries. Income tax free, baby. The wealthy have been using these vehicles for decades. Banks own billions of dollars in life insurance. Okay, your money is not sitting in no bank. The bank has many, many life insurance policies because they're the wealthy and they know where to hide their money. Okay, so if you don't know, now you know. The bank's hiding your money in life insurance policies, and we're in a big mission to help people like me and you do the same. Okay. The wealthy have been using these vehicles for decades. Banks own billions of dollars in life insurance. Why? Because it's one of the fastest, most tax efficient places to park and grow your money. Okay. So the next thing I'm going to talk about is the rule of 72. I want to show you. Hold on, let me drink some of my juice. I want to show you something that will blow your mind. Have you heard of the rule of 72? It's a simple formula. Divide 72 by your interest rate, and that tells you how many years it takes to double your money. Okay. At a 6% return, your money doubles in 12 years. So if your 401k is giving you 4%, right? I'm telling you a 6% takes your money 12 years to double. At 9% return, your money doubles in just 8 years. Okay? Just 8 years. Now imagine That growth is happening inside a vehicle that's also protecting your family. That's called my favorite, an IUL. Okay. Let me give you a real example. So, a 30-year-old starting an IUL policy, right, with $300 a month. That's $10 a day. By the time they're 65, that cash value could be in the hundreds of thousands of dollars. And they've had a death benefit protecting their family the entire time. $10 a day. $10 a day. That's less than most people spend at Starbucks every week. If you think I'm calling you out right now, I probably am. If you want to see real numbers based on your age, DM me the word wealth, and I will personally walk you through a no pressure to buy anything illustration just to show you what it would look like for you. All you got to do is DM me, and I'll be happy to show you. And I'm not going to be a pesky life insurance agent trying to sell you something. No, I'm not like that. I'm a generational wealth educator that wants to educate the people on what to use. And I will show you and set you up with the right people to help you get there. Okay? Now, I know what some of you are thinking. Jessica, that sounds great, but I barely have enough to cover my bills. How am I supposed to do this? Okay? I hear you. I want to speak directly to that because I have been there. I'm there right now, you know? I was there. And I am bad at saving. If you're bad at saving, this is the best thing you can do. It forces you to save because you're going to want to pay that bill every month. Because the only way it's going to grow is if you pay that bill every month. The only way you're going to have a real retirement and make sure your money never runs out like a 401k will in 4 to 7 years. You're going to want to know this stuff, right? You're going to want to get prepared now. So shift the mindset first, right? Shift the mindset first. Generational wealth does not start with a big check, right? It takes time. I know if I put $200 up a month, in 10 years, I'll be able to take out a chunk of a loan. I'll have put in $24,000, have made $60,000 plus, and I could take that money away tax-free. And it looks like it never left, right? And all I had to do was dedicate myself to putting $200 up a month for 10 years. You know, simple. You make it complicated. You make up the excuses. Generational wealth does not start with a big check. It starts with a decision, a commitment that says, I am going to be intentional, right, with even a small amount of money consistently over time. That's it. That's it. Consistency beats amount every single time. Consistency. You can't pay $200 this month. You were sick for a week at work. Pay $70. Guess what? There's a minimal amount you can pay. You agree to $200. They're going to give you a leeway. You know, of course, they're doing it to help families, right? So consistency beats amount every time. Okay. Before you say, I can't afford it, right? Before you say that, I want you to do one thing. Look at your last 30 days of spending. Not to judge yourself, but to find the leaks. Find the leaks. Where can you truly save for your own future? Like literally you're getting the money back times whatever. However much you put is whatever you're going to get back. Like I said, I'll put 24,000 in, I'll get over 60. That's what I choose to put in. It could be more. So before you say I can't afford it, find the leaks. Most people find $50 to $100 a month by just cutting subscriptions, right? They forget about it, reducing food delivery or skipping a few unnecessary purchases. That $50 a month. That's the beginning of a policy, $50 a month, right? That's the beginning of your legacy. And you could be protected the whole time. If anything happens to you, you could take care of your family. You get cancer, boom, covered. You get cancer, you lose your job, insurance with your job. Boom, you're not covered no more, right? So have a backup plan. Reduce food delivery, right? Start somewhere. Start now. The worst thing you can do is wait until you have more before you start it, because time is just ticking. You're never as healthy as you are today, and you're never as young as you are today. Remember that. That's important, right? I have clients who started with small amounts and grew into powerful policies over time. The amount you start with matters less than the fact that you just start. You just got to start, right? Get education, get a plan. Talk to someone who can show you real numbers, right? Your numbers, your age, your family situation, not a generic brochure, a real personalized strategy. That is exactly what I do and all my friends do, right? So, listen, I started this channel because I believe with everything in me that financial education changes lives, that the right information at the right time can break a cycle that's held a family back for generations, including my own, right? Tonight, we covered why generational wealth matters, the 3 mistakes that keep families stuck, why IUL is one of the most powerful wealth buckets available to you right now, and how to start even when you feel like you can't afford to. The question now is, what are you going to do with this information you just were taught? What are you going to do with it? Right? So, if you are serious about starting your generational wealth journey, DM me the word wealth, right? That is just WEALTH. I will personally reach out, no pressure, no pitch, just a real conversation about what's possible for you and your family, right? If this video helped you tonight, hit that like button, subscribe, and share. It helps more people find this information, right? It hurts no one to hit like and share and subscribe. It helps more people find out this information, find out what's out there for them. Help us break generational curses everywhere, right? Subscribe so you never miss a lesson, and share this with somebody in your life who needs to hear it, because generational wealth starts with one conversation, right? I'm Jessica. I'll see you the next time. Go build something beautiful for you and your family. Good night. Till next time, guys. I didn't do TikTok this time, so I can just talk to y'all. Good night.